Hello and welcome to this short webinar on the Autumn Budget 2025 impact on businesses. Hopefully you'll find this summary quite useful. I'll try and run through some of the announcements that were made and head back to some of the things that are already in existence and have been announced previously, as well as looking at how that might impact businesses generally. So without further ado, let's make a start. So we'll have a look at a general overview of the budget. So um, it was designed to be a bit of a stabilizing event. That's what the Chancellor says. We were expecting income tax threshold freezes. That was kind of going to be her go-to. But I think there was quite a lot of complexity that's been introduced into the system. I would say also just to be a bit mindful that a lot of the things that have been brought in or discussed certainly in the budget might well be things for later on. So there's a lot of dates that are being banded around from 2029. Rather than necessarily immediately. So some of the things that we'll go through 2026 onwards, that there are obviously things that we need to definitely know about and definitely start planning for. But some of the things from 2029, there's a long way to go before we get there. There's a long political path to cross before we get there. So things can definitely change before those things come in. So whether or not they actually come in those current forms is yet to be seen actually. So so an interesting budget, I think. But we'll see. We'll see what happens. But let's get into some of the detail, I think. Okay, on the personal tax side then. Personal allowances, as I mentioned, remain frozen. So again, this is this fiscal drag that we call it, which basically means we're just, it's costing us more money, but without actually putting taxes up, just freezing these allowances. Our personal allowance remains at 12,570, and the basic rate band sits at 50,270, with the higher rate at 125,140. So, and it's been a prolonged freeze. So you can see that this is it's almost a stealth tax. But you'll have your own opinion on that. The dividend rate increases by 2 percentage points, which is a big blow to those in business who are operating through companies. So you're now looking at 10.75% within the basic rate band for those drawing dividends out of their companies. A very large 35.75% when you're in the higher rate, and a huge 39.35 at the additional rate. Yeah, I think it's going to make a difference, and there's going to be some conversations to be had around how you need to draw money and how you need to structure your remuneration planning, that sort of thing. So the conversation around dividends versus salary versus bonus, those sorts of things. There's always been, dividends has always been the best way, almost, and that conversation has been slowly moving in a different direction over the last few years with the introduction of the dividend tax and the introduction of the increased corporation tax rate to 25%. But that conversation is now a different conversation, and it's multifaceted. So, there are other things that need to be taken into account, and there are other planning opportunities as well. But it's not as straightforward as saying dividend is the cheapest route. I don't think it is anymore. But it's also not as simple as saying the salary is the cheapest rate, because again, that's not the one size fits all answer. So we need to be careful and do some planning here. Around what is best for our limited company directors and shareholders. So some changes there that will affect individuals, and this is coming in from April 26. So so time to do that planning is now and over the Christmas period. So yeah, interesting times ahead, I think. Okay, pension savings and investments. So this is where the Chancellor has decided that we're going to keep that manifesto promise and not raise taxes on the working people, but instead we're going to we're still going to raise some tax somewhere. This is a tax raising budget. So what are we going to do? We're going to raise it elsewhere. So the ISA limits, whilst they're going to remain at 20,000 overall, we're going to cap that at 12,000 for cash ISAs, but you can put the rest of it into a stocks and shares ISA. Pension salary sacrifice. So there's the headlines was there's a big cap at £2,000, and that's strictly true, but the cap relates to the NIC, the National Insurance relief. So you still get the tax relief on the salary sacrifice above £2,000, but you won't get the national insurance relief. So employees and employers' national insurance kick in after £2,000, which is a bit of a kick to a lot of people that have been using that as a really tax efficient way to sort of boost their pension pot. Really, there is still some really good ways to take money out of a company. So company contributions, for example, are still very, very tax efficient. So nothing is lost there really, but it's a bit of a blow. And there are other ways to sort of reduce your overall tax burden from a personal tax point of view. Things like gift aid and personal pension giving, but you do need to do some planning there if that does affect you. So the inheritance tax planning and strategies, that's been on the cards for a little while. But again, you're going to need to do some reviews of that. The pensions coming in into inheritance tax is a blow, and possibly not a huge amount that can be done for many simple tax players, as might be the case. Okay, so on to capital taxes, your capital gains tax and inheritance tax. So it seems, and this is something that's been announced previously, the business asset disposal relief, the old entrepreneurs relief, moves from 18% to 14% from April 26. So if you are considering retiring or selling your business, then maybe just from a timing point of view, then you might want to accelerate things there. Again, this is not something that is new. It's been in the works for a little while, and it's been moving down. It was originally we were at 10% on that, and it's the relief has moved, and it's now going to cost you 18%, which is matching capital gains tax rates generally from April 26. So it's basically abolishing business asset business asset disposal relief over time. A big one that came out of nowhere, possibly, was employee ownership trusts relief, basically being halved, 100% down to 50%. Now that is a fairly niche area of tax, so it won't affect too many people. But it was a huge relief, which has just been sort of halved. Um, I'm not entirely sure what the Treasury think that that's going to bring in, but they obviously believe it's a tax raiser anyway. So and then you've got the inheritance tax thresholds being frozen, and of course we've seen this right the way across the board. And again, it's a bit of a stealth tax there. And again, with the business and agricultural property relief being capped at 1 million, with only 50% relief thereafter. So, and again, this is all stuff that we've seen over the last few years, and we've been doing a lot of proactive estate planning on that. So again, if you've not looked at that, then that is something that you need to possibly look at if it affects you. Okay. So yeah, welfare, labour markets, that sort of employment, social support, that sort of thing. Okay, national living wage. So this continues to increase with quite substantially, and this is going to affect employers significantly. So this is obviously good news for employees, but our employers are going to feel this impact quite significantly. They have been in recent times, and they will continue to do so. This is putting significant pressure on businesses, and this is increasing to £12.71 per hour from April 26th. That's the national living wage, and younger workers and apprentices will also receive an increase as well. So. Yeah, this is big, and yeah, I think this is going to be felt. Okay, the removal of the 2-child limit for universal credit. Obviously, this was a big headline grabber, and clearly this has been fully funded according to Rachel. So we'll wait and see who's paying for this, and I think we probably all know who is paying for this, as it appears to be employers and small businesses. And there doesn't appear to be a huge amount of tax raising for the larger businesses and for the wealthier clients. So I'll leave you to ponder on that. Business taxes. So this is possibly where there's not a huge amount of change. Nothing on corporation tax as such. So we've still got the main rate at 25%, 19% at the small profit rate, so below 50,000, and a hybrid rate in between. There is this new 40% first year allowance that's been brought in for plant and machinery, which is, I think, a bit of a red herring. It complements full expensing and £1 million worth of annual investment allowance. So I'm not entirely sure what it brings in. I think it's to assist with leasing companies who have previously been excluded from those regimes. So I'm not sure it's really relevant, certainly for SMEs. But if you're a particular asset-heavy business, then you might find that that's of use to you. But I think it's more of a red herring than an actual relief. And then we've got the Enterprise Management Incentive Scheme to expand its eligibility limits and remove some notification requirements from April 27. So it's more of an admin thing, really. Um, it's going to support some startups and some scaling businesses, encourage investment and growth. So, which these are all great things. So, we don't scoff at these at all. So yeah, we'll move on. VAT thresholds, value added tax. So much to there was a lot of speculation around VAT. We were perhaps going to take it down to 30,000 or 50,000 to align with Making Tax Digital. Um, uh, Maybe we were going to take it up to 120,000 to really drive growth, and then we did nothing with it. So it remains at 90,000. Deregistration threshold at 88,000. So there we go. That's where we are with it. From April 2029, though, businesses will be required to issue VAT invoices in a specified electronic format. So the EU have been doing this for a while now. So this is interesting. We've got not a huge amount of detail around this, and it is April 2029. That's strangely just outside of this Parliament. So whether or not this, I'd just take a pinch of salt with it. But it is the next step on from Making Tax Digital. It means that you basically report your sales certainly in real time. That's the drive. We'll see. I think there will be probably this will begin with some of the larger businesses, retail, certainly. I'm not entirely sure we're going to bring this in right the way across the board, but who knows? Certainly, software will support that, but it seems like a long way off. I think April 2029 is too soon for that, but that's my personal opinion. The government have always been very very forward thinking when it comes to these sorts of ideas, not necessarily when it comes to implementing them. So yeah, there was one other thing to do with admin, and that was they've doubled the penalties for late filing on so that was corporation tax, but there's also some additional penalties as well for compliance on that. So yeah, we'll move forward. Tax admin. There we go. So Making Tax Digital is definitely a go. If you haven't heard about Making Tax Digital, where have you been? Under a rock, perhaps? £50,000 threshold for sole traders. This year, £30,000 from 2027. So you need to be getting yourself onto some form of digital platform. The Sages, Xeros, QuickBooks of the world. And you're going to be filing quarterly reports into HMRC and then doing an annual sort of mop-up return almost. So that's the new world order from April 2026. So no change, but just to reiterate that crypto asset reporting obligations to begin in January 2026 is an interesting development. Obviously, HMRC are very keen to get their hands on a lot of that data because a lot of that has gone unreported. This will be a problem for lots of taxpayers, I think, who have generally flown under the radar with a lot of crypto trading, crypto investment, and we will see a lot of inquiries and HMRC clawing back a lot of tax there, I think. So if you haven't got your tax affairs in order with regards to crypto currency and crypto assets, then maybe now is the time to perhaps look at that and make a disclosure. Yeah, I think that's probably everything I want to say on that section. National insurance, yes. Same theme that we've had right the way through the budget. Yes, the levels remain frozen until 2031, which seems like forever, doesn't it? In the future. Um, Overseas voluntary NICs will face stricter conditions from April 26, which sounds wonderful. I'm not entirely sure how HMRC are going to actually police it, but there we go. That was the announcement. Removal of access from non-residents for an extended residency requirement for 10 years. So again, it's this clampdown of non-residents, but again, I'm struggling with the policing of it. HMRC struggled to police within the UK, let alone outside. So we'll wait and see exactly what comes of that. But yeah, there we go. That's where we are with that. Um, and yeah, that is pretty much the budget in terms of how it affects businesses. I would say um, there was a lot in there. There's still a lot of detail to come. A lot of it was headline grabbing and a little fluffy. Um, But yeah, if you've got any questions, if you're wondering how that affects you, please get in touch. More than happy to answer in my capacity at Maxwells, or indeed as vice chair at the chamber. Um, so yeah, do please get in touch, and yeah, have a great day.